finest known, specializing in retirement portfolios through precious metals commodity investments. Information about Finest Known's gold investment program and other precious metal investments is available at 1-866-697-GOLD.
Hello and welcome to Wealth and Wisdom with the Market Guys. I'm James DeGiorgia.
And I'm Jeff Garbaz.
On today's show, we're going to discuss some exciting microcap companies and some innovations in technology. Jeff, who do we have today?
Our guest today is David Weinstein, Managing Partner of Investment Banking for Dawson James Securities. David has more than 20 years of experience with U.S. investment banking firms. He was also Director of Research for National Securities Corporation. Thanks for being on the show today, David.
Thanks for having me.
Tell me, let's go a little bit about your background. Let's talk a little bit about that and how you got into being in investment banking.
Sure. When I was in high school, I went to Japan. I was a high school exchange student. And when I was there, I was asked to give a lot of talks on what it was to be an American. And I did a lot of research, and I ended up going to St. John's College, which is a small school in Annapolis, 300 students. And I studied the great books of the Western world. We had no textbooks. So essentially, we learned how to think. We read Jefferson, Aristotle, Weinstein, Plato, everything in the original. And when I left there, I thought that I could change the world with some of the ideas I had, so I went to graduate school at Maryland, where I studied foreign policy. But unfortunately, when that was over, through a lot of interviews and soul searching, I realized that I couldn't change the world in working for the government. So I made a U-turn, drove to Florida, and basically started looking at how I could affect the world from the bottom up. And that's how I got into the brokerage business, because I realized that capital is what drives innovation. And when you marry the two, you have public companies. So I started in Florida in 1985. I opened an office for G.K. Scott. I managed it. And I gravitated from that into research, to institutional research, which I did for many, many years, from 90 to 2000. And then I transitioned to investment banking, because investment banking really is the active element, whereas the studying element or the analytical element is research. And I had the analytical tools, and I wanted to put them into work to change things.
As somebody that doesn't know what an investment banker is, maybe we can explain that.
Sure. Investment banker basically is the Wizard of Oz. We're the folks that go out and take a look at all the new technology, the new inventions, new science, new medical breakthroughs. We assess management teams, and when companies are looking to get funded, we are the ones that conduct the due diligence, and we're the ones that actually put the packaging together so that the financial vehicle is correct, so that investors will buy it. When we're finished with our job, we deliver that product to Wall Street, and Wall Street sells the shares to the company, and it goes public. For instance, when Google went public, they had an investment banker that did the work to get it ready to be a new issue, and that's what I do.
Now, obviously, the U.S. has taken a little bit of a hit here, and we're moving into recession, credit crunch. How is the financing of private and public companies been affected? And also, you specialize in what are called microcap stocks. How has that whole market been affected by this slowdown that we've seen so far?
Sure. And in fact, I actually specialize in life science microcap stocks. So let me define that, and then I'll tell you how it is, how the economic situation is impacting myself, our firm, and our customers. And by the way, you might be surprised at what I'm going to say, because it's going to be the inverse of what people think, because everyone's looking at doom and gloom, and I'm looking at opportunity. And I'll explain why that is. So essentially, when we look at what I do, we look at biotech companies with medical solutions, what I call life technology companies. We have some global problems. For instance, global warming would be a problem. There are actually investments that will basically help us solve that problem and make people money, hopefully, at the same time. The food chain has dire problems right now. And what I do is take the whole puzzle apart, sit down with a team of very smart people that I work with, and figure out, first, from a macro point of view, which problems do we want to find companies that are solving those problems, and then try and find those companies, go out and go to conferences, meet them, and then bring them in and raise them money. How is that global the mortgage meltdown and the bear market affecting our ability to raise capital. Last year, we were Dawson James Securities, which is the firm I work for, and I'm the managing partner of investment banking. We were in the top 10% of all placement agents or companies that raised money by number of companies we raised money for, and the top 20% of all capital raised in the life sciences. So although the number was around 200 million, which is not a very large number relative to all the financings, it was pretty significant.
And how many companies in total within that 200 million?
Oh, we did about 12 companies all in, I think was the number. I'd have to go back and look, but it's about 12.
Okay.
So looking out at 2008, how is the mortgage meltdown and the bear market, if we want to call it a bear market, affecting our business? Well, the first thing you have to look at is just how depressed sub 500 million market cap companies are. So let me just define that. What we define as a microcap arena are companies that if you take the shares outstanding, add it to the debt that they have, that the total value of the corporation is under 500 million. If we had this conversation 2 years ago, you would find far fewer companies are in that sub 500 than today.
A lot of companies have come from a couple $1 billion down to the sub 500 million
and
level
some
now.
of them down to the sub 200 million.
Correct.
It's
correct.
And so in that ugliness, we look for jewels. So what I see is, as an investment banker, when we sell shares to new investors or shares and warrants or options on the future for those companies, in very bad times like this in the stock market, it's very rich times for the investors. To invest privately in publicly traded corporations or publicly in public corporations right now, the companies are having to make concessions to the small investor and the big investor alike that are made for an absolutely brilliant return if they succeed. So where a company, as an example, might go public at $8 a share or be trading at $8 a share and just go sell more shares 2 years ago, today, I know one company that was $8 a share, today is $1.80. They got an FDA approval for their lead product, and yet it's still $1.80, and they're going to go out and try and raise some money, and the vehicle, the way we're going to structure that transaction, if we in fact do it, would have been totally unacceptable to that company a year ago, and the investors would do very well if it works.
Now, an interesting thing that not a lot of people know about is certain institutions end up being precluded from buying stocks under $5 in price. So once they break that $5 offer, they kind of enter almost a netherworld of kind of new investors that will come in. Some will be still institutional, some will be hedge fund managers. Can you kind of talk about that space where this company, which has now fallen, as you said, down below $2 is in?
Well, that's true. Many mutual funds have a rule that says when the stock drops below $5, it's considered a penny stock and they can't purchase those securities. There's a plethora of hedge funds that actually go out and purchase those securities because they know that the news flow coming out of that company can have the same and maybe a greater dramatic effect on the stock when it's priced at 2 or 3 than it would at $10 or $11. So yes, it falls out of the venue of the larger mutual funds. Some of them cannot purchase it, but many of them can continue to hold it, which means that if the stock reverses over time, gets financed low, goes back through 5, they can add back to their position.
Yeah, a great example of that ages ago was Best Buy. Best Buy came public, did well, melted down similar to what we're seeing with Circuit City now, brought in new management, changed it around. Stock was down to $2 and now it's in the high 40s and ran all the way up to $60, $70. So they can go below and come back above.